Hey guys, this is Doji with Doji Stocks. This is my second video on YouTube. Today we're going to talk a little bit more specifically about supports and resistance and how we draw the lines, how we identify them, and what they really actually mean. Okay, so I'm going to put up a chart right here and we're going to look at it, and I'm going to just discuss a little bit about the resistance and supports. Okay, so support and resistance levels. This is the number one most common TA, technical analysis technique, that traders use. Okay, the point of these levels is for traders to anticipate potential buying and selling opportunities. So in this video, we will explore like the basics of support and resistance, which will include on what they are, how to draw them, and their significance in trading. Okay. So when you see resistance and support lines, they're pretty much horizontal lines that show us and tell us a story. Okay, so we're going to start with support. As you can see, what is the support? What is support? So support refers to the price level at which an asset's price has historically struggled to fall below. Okay, it is the level at which demand for the asset exceeds supply, leading to an upward price reaction where the prices is touching in. Support levels act like a floor, and it prevents the price from falling even further. So as you can see here in this little photo, we have the stock and candles coming down. It's hitting this support, which is the floor, and then it's bouncing up. So every time you see that there's a big bounce, normally will indicate that as a support. Okay, and obviously the opposite is the same for resistance. Okay, so resistance, on the other hand, is the price level in which the asset's price has struggled to rise above. Okay, and it's acting like a ceiling. So as you can see in this illustration, the candles are coming up, it's hitting this point, and then it's rejecting. And then same time passes, it hits the same points and then rejects. Okay, so what is telling us is that there's a lot of sellers in this area, and they're selling and dropping the price down. Every time the buyers step in and they bring this price to this level, there's too many sellers, there's a lot of demand, and then it's dropping the price. Okay, so how do you draw a support line level? Okay, so when it comes to drawing support line levels, there's two main approaches. The first one we're going to talk about is the wick drawing approach. All right, so when we do the wick drawing approach, as you can see here, it involves that the trader identifies the extreme high for resistance or extreme lows for support, reaching by the price during a specific time period. Okay, these points are referred by the upper and lower wicks of the candlestick in the price chart. So if you're looking at this, we're looking at the lowest point and how many wicks are touching the line. Okay, so for this illustration, obviously if you keep going down, you're going to have one here, there's one here, and one here touching. Okay, so you could say that this is a support line for this specific stock and this time frame. Okay, the second approach is by using the body technique. So instead of using the wicks, it's that horizontal line that it's touching only the body of the candle, as you could see here. One here, one here, one here, and also this doji right here. Okay, and then you just do a horizontal line right across. Okay, so let's go into a more specific chart. Okay, we're gonna go into this right here. Okay, so this is a Disney chart. it's a 1 week chart. Okay, as you could see, Disney has been going up and down. I'm going to take out these EMAs so it'll be a little bit better to understand. Okay, so right over here, you could see how the the line is touching all these points here. I use the theory of if we could get as many touches as possible in that specific line, the better it is, right? So as you can see here, this is a great example of a support line. And I'm going to zoom in a little bit so you guys can really see what is happening right here. Okay, so the story that this is telling us is that, remember, each candle is a 1 week long. Okay, so it's a 1 week candle, so it represents 1 week. So it's going up. As it passes this support line, it comes up, it touches the support line, it pops up, comes back down, and then it goes up. So we see these two candles right here, these 2 wicks are touching the support line. It's going to go all the way up, and then we're going to hit the resistance line right here. Once it hits the resistance, it rejects it. The sellers step in, drops the price all the way down, and then right in this level, we see it hits our support line. It rejects it. The buyers step in, bring the price back up. Sellers come in, take over, drops the price to the same level at 23.35 or 23.29, and it bounces for 2 weeks, comes back down, and then all the way up, and then it retests the resistance for a couple of weeks. And as you can see, it bounces multiple times at the resistance, and then it drops back down, and then back to our support line. So this is a great way to look at charts and see how to identify a support and resistance. And obviously, if you are a support and resistive trader and you only trade through support and resistance, you would eventually, right here, you go into a put option, or you would sell your stocks, and then you wait until it comes here to retest the support line. You buy your stocks, or you buy into a call, and you bring it all the way back up. Same concept here. You buy your stocks, you get into a call, and bring it up until other indicators and your technical analysis tells you that we're going to hit your resistance line. Then you sell your options, and then you get into a put and bring this back down. Okay, so this is one of the many techniques that traders would use, is buying calls at the support, buying puts at the resistance, and keep flip-flopping until the pattern breaks. For example, right here, you would think that in this area it would bounce, but unfortunately you have a gap down, it comes down, it finally hits, and then stays in this consolidation phase here. And then what's happening? It drops down again. So the sellers comes back in. So you got to be very careful. That's why you can't just use the levels of support and resistance to buy and sell your stocks or options. You would need multiple things that justify selling and buying. Okay, so here's a great example that it comes back to your support line. You think this is going to keep running up, but it consolidates and then it dumps. All right, so then if you were in calls thinking that this is going to keep going up to your resistance level, you're going to lose all your money because sellers kicked in and took over. All right, so because this was support, then it would bring into, well, I don't know what happened to my chart here. Okay, chart is gone. But anyway, you guys understand what we were looking at. So whenever you're looking at the chart, if you think it's going to bounce and go back up, this will turn from support, I was saying from support it will turn into resistance. All right, so you always have to look at the chart, making sure that whenever you draw a line of support, it's not always a support. It will flip over to a resistance. So as you can see in this chart right here, the the chart, the candle bounced on the first one, bounced on the second one, bounced on the third one, bounced on the fourth, even bounced on the fifth, sixth. On the seventh, you would think it would bounce up and stay up in this area, but it fell through. So this is a breakthrough, and then the resistance became the support became resistance. All right, so then it comes back up. It probably retested the same line here, and then either continue rejecting because this becomes resistance, or it could have popped through and then it turns back into support. Okay, so that's the story between support and resistance. Okay, so I hope this was helpful. And then what we're going to try to do is we're next video, I think, is we're going to talk about a little bit of different types of EMAs and different indicators. So the point of these videos is just all for educational purposes. It's not for you to buy, hold, or sell any stocks or options or even cryptos. So hopefully you like what you like, and you understand what we're trying to put out for you. So please, I would really appreciate a like, a subscribe, follow our YouTube channel. And if you have any suggestions or you want to learn about some new technique or a stock or anything you want to learn about stocks, please DM me, send me a message, and then I will do a video for you. All right. Have a great one, and thanks for tuning in. Bye-bye.